Good morning, traders. Paul here with GammaEdge. Today is Monday, the 20th of March. Let's get started. Pause your players, read to the very bottom. If you agree, hit that play button. Summary for today. We're red across the board. We do have a downside trigger day. This is a reversal off of the up trigger day that we had on Friday. That is just the nature of the beast. When you're in a chop zone, you get chopped. The terminology here of tag combo 8 and tag combo 10 will become apparent in the next couple slides. These are internal testing scenarios that are familiar to the Discord users. We're going to look at using the 2x, contra 2x ETFs, the SDS, QID, TWM, and DXD. And here are the statistics. So upside 0.93%, 1.37 for tag combo 10. Average drawdown here, and then worst case right tail drawdown here. This is an open to close, so if it looks like we're going to achieve these goals, we'll close early, but by the end of the day we'll be out of this trade. We are still long-term bearish, and the ribbon is inverted, and you can see all the various different tick variations that we track. Have been in a downtrend, so any rally that we get will be a bull rally within an overall bearish environment, and going against the trend is generally not recommended, but we know time frame matters. Our market breadth indicator is viewed by the 52-week new high, new lows. We had, again, the 52-week new lows outpacing the new highs. We had 576 new lows compared to only 59 on Friday. So again, getting hammered to the downside, more stocks risk off than are risk on. We watched something called the transition range. It's unchanged from Friday. That means we are effectively in a chop zone. We're not doing much. Spot price closed just below this, which is overall just a little bit bearish. We need to get above this 39.55 in order for the bulls to have any chance. If we remain below the 39.20 zone, things are going to be more decisively bearish all the way on down to 3900. So again, below 39.55, expect more chop. Below 39.20, expect more bearishness. The OTM put speculators are now dominating the land below us. We actually had some calls, in the money calls, that were really starting to dominate the landscape on Friday. We showed that, and it all was negated with the expiry. Sequencing here we believe is important. Any short-term addition of out-of-the-money puts, which is below us, of course, will pull us down. And we think that 3,900 could get tested. A do-nothing scenario where we just sit on our hands will be supportive of upside charm flows. There are a lot of puts below us, and as those things decay, that'll put a natural upside wind into our sales. And then if we close those puts, that could cause rally. So just be aware. But the key lines in the sand, 39.20, 39.55. Our zero DTE traders should be aware of the charm sensitivities at 3,900 and 3,950 and play those accordingly. So you can probably play long off 3,900. You can probably play short off 3,950. Of course, you want to wait for a test. So if we come down and bounce or just go just below as a sweep, play accordingly. Once we get above that, you'll know immediately if you're right or wrong. Same thing at 39.50. If we push up to 39.50 and we bounce, wait for the retest of 39.50 again. And if we fail that, you can play to the short side. Taking a look at the broad composite view of the cumulative tick overall downtrend, it's been intact. You can see by the parallel nature of the lines there. We've been here for a while. Any rally that we get is subject to failure. We saw that Thursday, Friday. So just be aware of that. If you're fighting the trend, you're going to be fighting the trend. It's that simple. When we take a look at the short-term cumulative tick, which is the exact same signal that you see here, we are lower. We don't know if we're going to go higher. We don't know if we're going to go lower. Use the basically the close of the previous day as your reference point to figure out if you're going to take a reversal or not. We call this tag combo 8. Tag combo 8, the statistics are all right here. Drawdown, upside, 71% win rate. Just be aware of that. This is for the bear ETF case. When we take a look at what we call the short-term railroad tracks, you can see they turned off again on Friday. This is a tag combo 10, 10. It's got a pretty good performance to the downside. Again, 81% win rate, 4% right tail drawdown. Worst case, this is intraday. This is just open to close, so this is a one-day performance. I wouldn't get out over your skis here. We're in a chop zone, and you can tell that by here. We're not in a strong trend. We don't have a strong uptrend or a strong downtrend. So whether you take these signals is on you, but the mechanics say that there is a bias in play for today. Key levels, when we take a look at the gamma levels, expected move today is actually pretty high. There are obviously world events is causing some uncertainty. We are seeing a little bit of bullishness in the SPX PM, which we separate out. So just be aware of that. 4,000, 3,800, and then not shown here is a 4,200 line, which is plus GEX. You'll see that on the last slide. Overall net charm flows, as I indicated, 3,900 is a positive flow sequence, and a 3,950 is the negative sequence. And so if we remain between those, you can see what's going to happen. If we move above these, that's going to be very, very interesting, because what will be out of the money will now become in the money, and that could be a massive rally to the north. So 3,950 could push us very, very fast upward. A break of 3,900, you can just tell by the magnitudes here, will push us most likely very rapidly down, and we will test 3,850 and points south. Here's that 3,850 that I was just speaking. 3,800 is minus GEX, 3,900. So you can see in terms of the overall SPX PM complex, dominant strikes are there at the half levels. We do urge some caution here. We do have short-dated out-of-the-money puts. They have returned in force. They are completely dominating the ground below us. To the upside, we are losing the out-of-the-money calls. When we lose that, it makes it very, very difficult to move north. Now, here's that JPM strike that rolls at the end of the month, 4065. It's being somewhat negated. There's about 4,700 or 40,700 that we're watching there. You can see the net of that is 28, so we've got quite a bit of long calls that are stacking on top of these things that are negating those short calls and giving us that net value here. Just want to call out that we are significantly more put dominated than we were on Friday, so obviously a lot of short dated puts went into the complex. 0 DTE transition shown here, a little bit lower. We parked right in the middle. We expect we could go either direction. This really is a chop type of thing. Looking at the 1 DTE, we're a little bit below it. This is our crystal ball view into tomorrow. It is up slightly. When transition moves up and we're below it, that's not necessarily good. That shows that the puts have gone in and are pushing up on what's called negative trans or negative transition threshold. What that basically means is just we're right at this point where we're more bearish than bullish. We've got to break above this 40 or 39.45, 39.50 zone to have any chance to run north and move up aggressively. Excuse me. This view, I expanded it, and rather than just looking at the week, really there's nothing on cue except for noise, and obviously we've got some Fed speak this week. So really wanted to look out to the end of the month, end of the quarter, which is where the JPM roll is. And so this JPM roll, one of those strikes that is going to get rolled off here, and it could be material as we go into the end of the quarter, is sitting right up here. And when we take a look at the overall, this is the SPX, this is the combo, so we're looking at both AMs and PMs and their influence up here. You can see where we are in terms of net delta as well as net calls here. And so what this basically portends is that between now and the end of the month, this 39.20, 39.55 is a key zone. I mean, you can't hide from this. It's very obvious on us. If we can't get above 39.55, it's just going to be more chop. To the downside, this is not constructive for the bulls. This is very constructive for the bears. And you can see those halve levels that you're seeing right here. So the OTM put dominance will continue to put pressure on us to the downside. loss of the 3,900 now opens up the door to really pulling us south. We've got gamma, which is negative, and then we have deltas, which are negative. And this will embolden, we believe, will embolden the the bears, and that will continue to pull us north, and this number will grow more negative. So just be aware of all of that. On the flip side, if we can break above the 3950, that's really the last line, and if we can push upward towards this 4,000 strike, we'll be in pretty good shape actually to start rolling up. And I won't get into it today. We did write a blog on this, but this will become a pin, become a magnet as we get closer and closer. The magnitude is just going to continue to grow here, and that has some implications for the dealers as we come up on a short strike. What happens to price and what happens to dealer response in this? It'll start dominating all the air in the room in this particular area, and negating it effectively, pulling us up and then pinning us. If we go above it, we'll get pulled down. If we get caught into this area, and there is a transition range in this area, if we get pulled up past that transition range, it's almost like a tractor beam, and it's going to pull us up. So we'll see what happens here. The combo complex negative. We've got really a funky, and that's a technical term, we've got a funky type of transition that's setting up here. We've got some pretty strong negative gamma in the middle here. We've got this node that has developed here at 3920. And then you can see we've got a very, very strong gamma transition and very strong delta transition right here. So we're looking to see this 3950, 3955. That really is the line in the sand. If nothing else, I would not get long in this market until we get above 3955. It's that simple. To the downside, relative to Friday, we are complete reversal of structures. We had downside in the money calls that were dominating the conversation, with the exception of this 38.95 strike just below this. You can see that the out of the money puts have returned. The speculators are present, and this is the combo, right? This is a huge amount of contracts. We were up at 19 million on Friday. That either expired at the open or at the end of the day, and now we're down significantly. So we've got a redistribution that has occurred. This is what it looks like, and it's pretty bearish on the downside. Taking a look at the last slide here, the combo structure, 4,200 is the right goalpost to the upside, 3,800 is the left goalpost to the downside. Here's that 3920 kind of lone soldier sitting out here. Obviously, we've got to get above that. Once we get in that, we've got to push against this 3950. That'll be interesting to see how that plays out, see if we can get this negated. A good scenario would actually be calls to go in above 3920 and push these into a more positive gamma structure. That'll open the path to go north and possibly start working towards that pinning scenario, one of several that exists up here at 4065. Failure to get above 3950, 3955, there's not a chance, folks. I would not go long in this market until we can get above that 3950, 3955 zone. So that's it for today. If you have any questions, comments, want to come in, kick the tires, go to GammaEdge.us. In the upper right-hand corner, you'll see a pricing tab. Click on that. Fill out the blanks, pick your plan, 14-day free trial, all the tools turned on. Come on in. We've got very active, about a quarter of the membership, which is a large number, is in voice every day, talking about stuff, talking about what they're seeing, asking questions of each other. It's just a great training and trading environment. Follow us on GammaEdges. We did write a blog post this weekend looking at XLF, or a series of threads. So would like everyone to go to GammaEdges, read that thread, like it, retweet it if you agree. And then here on YouTube, of course, two things. First thing, if you like today's content, you find it actionable, smash that like button. It gives me immediate feedback that I'm providing the content that you guys can use, and it's helping you. And then, of course, subscribe, because Taylor, myself, and Mike will post videos, usually 1 to 2 a day, and we want you to see what we're seeing. So with that, make it a great week, and we hope to see you in the Discord. Thanks, everyone.